Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, guys, we will be covering live market analysis, a watch list of trading opportunities, a forecast of where gold, silver, oil, and also platinum and palladium are heading, and of course, we will be answering questions and providing live support. As always, guys, we will keep it very interactive. Any questions, any comments, do put those into the chat and we will make sure we cover those during the course of today's session. Before we get started, let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agriculture markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, and Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, fantastic. So we'll get right into it, guys. And what I want to have a look at the moment is two things here. We'll have a look at the year-to-date performance of commodities, and we'll also bring you up to speed with how the markets have moved over the course of this week. So it is important for you to understand which markets have had the biggest gains this year and which have had the biggest loss this year, for you to understand which markets have transitioned into a bull market where you want to be buying more of this particular market, and those that have transitioned into a bear market where you want to be selling more into that particular market. So the strongest performing market as of the close yesterday this year is actually orange juice. Orange juice is now up 41% in 2016, followed very closely by sugar, which is up 39% so far this year. Now, interesting to note, even though we have had some corrections over the last couple of months here on the precious metal, silver still remains up 25% in 2016. If you had taken a position on silver at the beginning of the year, buying silver, you would be up over 25% on that position. At its peak after Brexit, we saw silver come just shy of up 50% in 2016. It's had a 50% correction from that point onwards, and it's currently sitting up 25% this year. Coffee has also had some significant gains over 2016. Coffee has actually increased by over 5% this week alone. It's now up 21% this year. Brent crude oil is up over 20%, and gold is currently up 18% so far this year, followed by palladium, which is currently up just shy of 10%, and platinum, which is up 7.5%. Some of the markets which have obviously had big moves to the downside this year include the pound, which is down 17%. Wheat has been one of the worst performing markets this year, which is down around 20%. And also natural gas is down around 8% at the moment. So that's to give you an idea of how markets have performed so far in 2016. Now, if we have a look at the last week, where the momentum is going, and you really want to be making sure that you're trading markets where there's a lot of liquidity and also there's good volumes going through those markets. Typically, you want to be trading markets which are moving well day to day. The volumes are good, and you want to make sure that you're aware of which markets are the most active at any given week, because that is where the opportunities lie here. When you've got markets which are very quiet, gold hasn't really done too much over this week, neither has silver. Both have been very much range bound. Markets which have had quite big moves this week have included coffee, copper, platinum, certainly, soybeans as well. Cotton to a certain degree, it's had a nice move, and corn. And for those of you who are looking to maybe sell short into some markets, there's been a big decline in natural gas here. It's declined 12% over the last week. And in fact, crude oil, after it hit 2-year highs last week, has declined 2.88% over this week as well. So just to give you an idea of where you really want to be positioning yourselves. Most of the time, you want to be trading markets where you've got good volumes flowing through those markets, and those often offer good trading opportunities. So what we'll have a look at now, we will have a look at the commodities which are available on the binary platform, and that includes crude oil, gold, silver, platinum, and palladium. As you can see there, platinum's had quite a nice pop over the course of this week, and we'll take a look at that in more detail with you as well. Now, we'll be looking at two types of trade on binary.com. Very straightforward type of trade. It's higher or lower. Very simply, if you select higher, you win the payout if the market exit price is above the entry price that you've entered into a trade. And if you select lower, you win the payout if the exit price is below the entry price. So just to break it down for you, what you need to get correct when you're taking a trade like this is, of course, the timing of your trade. So you want to make sure you're getting in at the best possible price. Beyond that, you want to make sure that you're getting the direction right, whether it's higher or lower. And then most importantly is the time frame. Do you want to be in and out of that trade within an hour, within 4 hours, within a day, within a week, within a month? Depends what sort of trade you're doing. If it's a day trade, if it's a swing trade, if it's a news trade, if it's a breakout trade, if it's a longer term, mid-term trade, that would all depend on your strategy. But essentially, higher and lower is a very straightforward way to trade the markets. And the major benefits I see is having this as a tool in your trader toolbox is the following. Number one, you don't need to have a stop loss. You don't need to have a take profit. So you don't need to do too much in terms of trade management. Once you've taken on a position, that's it. It's up and running. There's very little that you need to do. You just need to allow that trade to work out as you have set the criteria for it. The other benefit here is we are going to get into very volatile times very soon, guys. We've got the US election coming up, which is in about 2 weeks now. And with that, we do expect a lot of volatility around that point in time where normal day-to-day trading, unless you really know what you're doing, you could be stopped out of positions. You could see whipsaws in the market, very similar to what we saw on Brexit, maybe even bigger than Brexit in terms of the volatility this will cause on the market. And binary trading offers you quite a low-risk way where you know what your risk is up front and you can allow for the volatility. You don't need to have a stop loss or a take profit. It can actually be perfect for these sort of trading conditions, okay? So it's worth bearing in mind that binary is certainly a tool that you want in your trader toolbox. Now, with that said, what we'll do, guys, we'll move over to some live technical analysis. As always, any questions, any comments at all, do put those into the chat. Feel free to do so as I break down the markets, exactly what we are seeing at the moment. And if there's a particular market you are interested in, which we're not covering at the moment during today's Commodities Corner, drop it in the chat and I'll see if we can cover that for you as well. Okay, so I'm just going to share my screen, so you should be able to see my screen in a second. Just hold on while I do this. Okay, that should come up for you very shortly, guys. Just hold on. Okay, I'm just checking in, guys. You can see my screen now. I am currently sharing silver, so you should be able to see the silver chart. I'm making sure you can hear me okay. Yep, fantastic. Thanks, guys. Okay, good. So I'll tell you what we'll do. We'll break it down for you. And first of all, I'm going to show you an interesting chart at the moment. Now, this is the volatility index. A lot of traders utilize this, particularly professional traders, to analyze how the markets are likely, or to be able to predict the markets, how they're going to move in the future. Now, why is the volatility index important? I've got a lot of indicators added to this to really give me a better idea across multiple timeframes of where we are heading next. The volatility index measures the amount of volatility in the market. It measures fear in the market, uncertainty. When you've got increased fear, increased uncertainty, this is where the volatility index spikes, and that is favorable for gold, silver, and it's unfavorable for the stock market. Okay, so where you've got more volatility, where there's more uncertainty, this is where, and volatility index has been going up over the last few days here, and we're starting to see stock markets roll over, and it has been supportive to some degree for gold and silver, although it hasn't started to really have its big move to the upside just yet. Now, what do you need to know about the volatility index? Okay, let me point out some of the breakouts that we've had over the course of this year. We had a breakout, quite a large breakout of the volatility index here, which actually was at Brexit. Okay, so during Brexit, uncertainty increased hugely. We had a big spike in the volatility index, and with that, gold actually that day moved from $1,250 to $1,350 within a matter of hours. It was a huge move, a 1,000-point move, which is almost unprecedented for gold to have that sort of a move within such a short duration of time. It caused a huge breakout to the upside. Also, earlier on this year, if you go back to the beginning of the year in January, where the stock markets, global stock markets, had one of their worst starts of the year in history, look at where the volatility index is. At that point, there was a lot of fear, a lot of uncertainty in the market, the volatility index spiked, and with that we saw gold and silver break out significantly. Gold increased 15% over the first quarter. Silver then caught up with gold over the second quarter, and eventually after Brexit, silver was up just under 50% in the year. Imagine if you held on to a position at the beginning of the year in silver and you're up over 50% on that, just whether it's the physical or whether you traded that in the markets. It's a huge increase in any market. I'm putting this on your radar now because as we go, actually even today, we've got US GDP numbers which are due out in about 45 minutes. Next week, we have Bank of Japan announcement on Tuesday, which will cause likely a volatility. Next week on Wednesday, we have the FOMC statement, which will give further clarity with regard to when the Federal Reserve will be ready in a position to go ahead with interest rates. And next Thursday, we have the Bank of England, which could cause more volatility, certainly for the pound, and inversely, that can affect the US dollar's strength. Next Friday, we have non-farm payrolls, and in the following week, we have the elections in the USA. So we are coming into times of volatility now. There's going to be a lot of uncertainty in the lead up to the election, regardless of who wins, as to how that's going to impact the financial markets. Of course, if Donald Trump was to win, that is going to cause a lot of uncertainty in the markets, more so than if Hillary Clinton wins. However, if whoever gets in, it's going to cause volatility in the markets. There will be a lot of uncertainty after this, and that is going to cause some potentially great trading opportunities. Now, you can see the volatility index here, where we've got this rising formation at the moment. We've got a trend channel very clearly. We're creating higher lows. You can see also where I've just identified overbought and oversold condition. We're within the support zone of nearly every single indicator that we utilize across multiple timeframes, where I am expecting some support here and potential rally of the volatility index as we go into November. Now, I think in the short term between now and next week, we could sort of back and fill a little bit here until the election or until the FOMC statement next Wednesday, and then non-farm payroll next Friday. But ultimately, I am expecting more volatility. With more volatility, safe havens get bid up, and that would include gold, silver, and potentially the US dollar as well. Now, with that said, the US dollar index is also important. So we need to be aware of what the US dollar index is doing as well. So I will just bring you over to the US dollar. The US dollar index last week broke out to 7-month highs, okay? And that's quite important because with that did cause a bit of a pullback again on gold, silver, and other markets which are inversely correlated to the US dollar. So this is the US dollar index, and this is currently the level that we're at the moment. You can see the 7-month highs, which we recently breached. I think actually this week, yesterday, we broke out towards 8-month highs here. It's just consolidating near resistance at the moment. Now, it is starting to get overbought. If you have a look at a weekly chart, we're kind of sat around a major level of resistance, but we have the US GDP numbers, which are coming out in approximately 45 minutes. So on those numbers, I am expecting volatility, and that will likely give the direction for the rest of the day for the metals as well. So with that said, if we go over and we break it down and just have a look at silver right now, silver has been channeling sideways all week here. You can see we've got a consolidation. We've got a pennant formation here. Overall, it's come off this oversold condition since non-farm payrolls, and it's just been channeling sideways now for about almost the last month, actually, for about 28 days now. Following on from non-farm payrolls at the beginning of the month, we've got a pennant formation. So I would suggest really to any new positions at the moment on gold or silver, hold fire for the US GDP numbers to come out, and that should provide a catalyst. Now, if the US GDP numbers come out as positive, strong for the US economy, then we would expect the US dollar index to break out to the upside, and I would expect gold and silver to therefore sell off. They've got pennant formations at the moment where if they break support, we could see a move lower here, a wave lower back towards around the 740 zone, maybe even low as 1700. It really depends what sort of numbers come out. However, on the flip side of that, gold and silver still have the ability, if the US GDP numbers come out worse than expected, for gold and silver to break out to the upside, because we're still stuck within this pennant formation. We're not giving way to the sell side or the buy side at the moment. We're stuck within a very tight range, and we could see a pop to the upside if the US GDP numbers come out under expectations, they come out as negative. With that, we would expect the US dollar to sell off from its overbought condition, and that would cause a pop to the upside in gold and silver, probably quite a big move. So that is what we've got happening really over the next 45 minutes here. If we didn't have the US GDP numbers coming out, and we were just, if this was just a normal trading day, yeah, I would still suggest that we need to either break support or resistance. We do have rejection candles which have been forming on silver over the last 2 or 3 sessions here, but we've got a lot of strong underlying support. You have to look at where we're sat in the context of price. We're sat at the 50% Fibonacci retracement level for silver, which is from the lows of the year up to the highs. You've also got underlying support at the 200-day moving average. So any sell-offs, I would be wary of silver here. If you're shorting it, if you're going for a sell, they could get bid back into on a move and a test of the 200-day moving average and the 50% Fibonacci. That could present a bit of a brick wall here. So I would be careful today, over the course of the US session today, in either direction really on gold and silver until we get a little bit more clarity as to the direction here after the US GDP numbers. Now, if we go over to gold, very similar formation on gold at the moment. It's been channeling within a pennant formation over the last week. It's getting tighter and tighter at the moment, this formation. If you look on the daily chart, there is a possibility that we're forming a bear flag formation, which could then provide a sell short opportunity on a breach below about 1,262 US dollars. We could get a wave lower here. It's consolidated enough where it could get a shift lower, but also we're starting to cross over here where we could also get a pop higher. We're at a supportive layer, which on lower time frames continues to get supported at the moment. You can see we've got very strong underlying support on the short term here around the 1265 zone. We're still finding support at that level. So I would say, again, make or break really for today with the US GDP numbers coming out as to whether gold and silver will have another pop higher here or whether they will roll over and sell off. Now, one of the best performing metals over the course of this week has been platinum. Platinum's had quite a significant pop to the upside. It has moved here from its lows to its highs, about 450 points. For a binary trade, we've caught this position just for a small pop to the upside here where it's just popped from this. You can see where we've just hit the lower end of this zone around the 920 zone, formed a rejection candle. That's followed through, had a nice pop which we caught earlier on in the week for a binary trade for the price to be higher, which I'll cover with you shortly when we go through our top trade of the week. So we've seen a nice pop this week in platinum. Platinum is also at a decision point. It's got overhead resistance here, which it's banging on the resistance zone at the moment. If we get a break above that level, this could really start to shoot quite significantly higher. So I'm watching platinum quite carefully here to see whether it does have the legs to follow through or whether it will reverse and start to sell off and roll over and rotate lower. Certainly, if we have a look on the weekly chart here, so far we've broken above last week's high. We've got a bullish engulfing candle in development, and we've sold off significantly from the highs going back to the end of July, beginning of August here. So I would definitely keep an eye. Platinum, I really like the look of this, and I would keep an eye on this, guys. If you're looking for trading opportunities this afternoon, if we break, and this will be a break of the resistance zone here, if we do get a breach above 975 is the level I would look at, you can see that's a major trend channel. And I would just dig a little bit deeper into this for you now as well and just show you what I'm looking at for platinum here on higher time frames. Okay, so if we go over, in fact, let's just break it down. Let's have a look at platinum. Yeah, so I am looking at platinum here. It's come off a major area of underlying support more recently. Certainly a lot of my indicators are indicating that we could be about to base here around the 920 zone, and we could be getting ready to lift off here with platinum. You can see here on a completely raw chart where you've got this key overhead trend channel, which we're just about starting to break today. And if we do get a pop higher, the US dollar index is getting overbought, still has the ability to break out higher, but the US dollar index is getting overbought at the moment. And if it was to shoot lower today, if we were to see a correction this afternoon, that would definitely give rise to a potential breakout here on platinum. So I would certainly keep that on your radar. I do quite like the development of platinum right now for a trading opportunity. Now, with that said, we'll also have a look at oil, US oil in particular, and also Brent crude oil as well. We can have a look at. We'll have a look at Brent crude oil because that is the crude oil which is traded on binary. Now, at the moment, I would suggest oil right now seems to still be at a bit of a make or break point. It is just consolidating at a level of support here. You can see here quite clearly on a number of indicators. We are at a bit of a decision point here with oil where either I'm expecting oil here to find support and get ready for its next leg higher, next pop higher, or it's going to roll over and have a deeper correction at this point. If I break it down for you and just show you oil on another time frame here, you can see it just on the daily chart. It is rolling over, but it is finding underlying support around the 49 to 50 zone. Right now we're at 49.50. So the 49 level, if we get a break below that, close below it, we do look like the price is rolling over, but there's still underlying support. It's a make or break zone at the moment for oil here. So I would be careful depending on which direction you're looking to go in either buying or selling oil right now until we get confirmation. Essentially, if we get a break below for US crude oil here, actually I'll go over to Brent because that's what we trade on binary. Let's go over to Brent crude oil. Okay, so the key levels on Brent here. A break below $50 and breaking the weekly pivot as well at $50.50. If we break that level, that's where I'm looking for the next wave lower here in the short term. Okay, so that could give rise to a trading opportunity. If we break above resistance, we break above the last couple of days worth of highs, above $52 per barrel, we could be up and running for another leg higher for a retest of 52 yet again. So we're at that decision time at the moment for oil. If we go into tighter time frames, you can actually see it looks like we're starting to roll over. Possibly you might be able to catch a shorter term trade here, trade it back down to the lower end of this trend channel. If you like intraday trading on oil, you could probably go for a short at this point. 4-hour time frame, we're starting to roll over. For a binary trade, price to be lower, just look for the price to come back down towards the lower end of this trend channel in the short term. But bear in mind, we have the Baker. I would only look at that as a short-term trade. We've got the Baker Hughes report coming out later today as well, which is 6 o'clock London time. That could also give another move here. Ultimately, I want to see how oil closes out the week. If you have a look at oil on a weekly time frame, it developed 2 rejection candles last week. It started to break below those levels. If it retraces into the close, forms a hammer by the end of the day, we might still find support at this zone. But if we get a break and a close below the last couple of weeks worth of lows, we could really start to roll over and see lower prices here for oil. So I would also bear that in mind as well. And also just putting on palladium just on your radar as well. Let's just go over to palladium. Platinum's been a better mover than palladium over the last week here. But if we have a look at palladium, palladium has also come down to the 50% Fibonacci retracement level. Okay, so if you have a look at the highs, for those of you who use Fibonacci or you've got some understanding of it, essentially, actually, let's just move this. We'll look at 2 different levels here. Okay, we've got one, which is the swing low going back to March, 50% Fibonacci. We'll actually go out a little bit higher time frame here. We'll have a look at the January lows and the Brexit highs afterwards. You can see just underlying here, you've got some major zones or major trend channels here, which have been supported at the moment for palladium, just sitting above the 200-day moving average here as well. So I would bear that in mind. We'll see if there's any other significant levels here. Yeah, actually, that's interesting, isn't it? We're sitting from the lows going back to July this year. We are exactly at the 61.8 Fibonacci retracement level. So for those of you who utilize Fibonacci, typically the best levels to look at are the 50%, but even better, 61.8. If you get a retracement after a leg up and you find support, the 61.8 retracement, that's a level where often we can get a leg up higher here. So you can see now why quite a lot rests on today's US GDP numbers, which are going to come out in the next 35 minutes. So again, if that is a strong number for the US economy, I would expect another pullback on gold, silver, platinum, and palladium. If it's a weak number, though, if it's below expectations, I would expect a pop higher here for gold, silver, platinum, palladium, and the US dollar to sell off from its overbought condition, and it could be quite a quick and sharp sell-off. So that's just something to bear in mind. That's coming up in the next about 35 minutes. I would probably wait until that news announcement has been factored in before taking some trades here. Essentially, I like palladium and platinum here for a potential buy from an oversold condition. I would just wait for a bit of confirmation on these markets. Gold and silver are sat right within a pennant formation, which is where they are likely to get a breakout. You've got a doji here, which is complete indecision at the moment for silver. So we've got, just show you this on this chart here. You can see here we've got indecision. In fact, it's just turning green at the moment. So it's not really breaking down as one would expect from a pennant formation. It's had plenty of opportunities over the last 4 days to break down, but we could see a violent move on the US GDP numbers. There's certainly a lot of underlying support, and there's overhead rejection candles as well. So we're really stuck within a range now on gold and silver, where I'm waiting for this afternoon to get some clarification as to which way this is going to break at the moment. So I will probably just hold off until the GDP numbers come out before taking on a position. So again, just to reiterate, guys, on silver, if we were to see a break above, so I would be looking for, in terms of long opportunities, a break above the 17. I'd say go a little bit higher, maybe about 17.95. See a break above that zone. That could give rise to a nice breakout trade, price to be higher. If we were to break below underlying support here, which would be roughly around the 1750 zone, if we break below that level for the price to be lower, that could also provide a good trading opportunity. If the US numbers come out really strong and the US dollar breaks back above its 8-month highs, that could provide a shorting opportunity as well. It would look at that and also the potential for platinum to have a breakout to the upside too. So with that said, I will actually go over and just talk you through our top trade of this week, which was indeed our platinum trade. So the trade that we took this week, our trading performance update using our exclusive research-driven strategies, was platinum, where we took advantage of a position at $935 per ounce. Rise trade for the price to be higher. Nice pop from that level of support, coming out the same day and benefiting just from a rise trade for the price to be higher. Now, if you would like access to our live trade ideas throughout the week, shared with you, ready to implement for instant results, those are sent out to you via email notification. You can join us for our live trading rooms. You can get access to all of the services at the Gold and Silver Club. Very simply, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will, of course, get in touch with you ASAP. So I'll just put the link there in the chat for you guys. Okay, fantastic. So that is just www.jointhegoldandsilverclub.com. Okay, fantastic. So what does it include? I'll just break it down for you guys. So in terms of what it includes, who's it for? Well, essentially, whether you're a new trader and you want to develop a solid understanding of the markets and fast track your results, or even if you're an experienced trader, you've enjoyed today's session, you feel you're learning something, and you want to take your trading just to that next level, you can see there's a lot more maybe you should be incorporating into your trading approach. The private members live trading room is definitely something you should consider. As a member, you get access to the following: exclusive live trading room webinars. You can watch the Gold and Silver Club expert traders analyze the markets right in front of you, picking out highly profitable trade setups, sharing exact details of exit points, entry points, stop loss targets, as well as walk you through live trade ideas ready to implement. You get email and SMS notifications, so real-time notifications which alert you when to enter a trade. Those include exact details of where to enter, exit, place a stop loss, and all notifications are sent out in advance notice, so you've got plenty of time to get into each position at the best possible price. And you get commodity research and market insights. So you get exclusive access to our trading research and market insights. You get a week ahead wealth trading plan as well, giving you all the trade setups that we're looking at for the week ahead. And you get our trading research, which is there to give you the ultimate edge in the commodity market. So very simply, again, guys, this is what it includes. You get exclusive weekly live trading room webinars. You get live trade setups ready to implement, real-time trade notifications by email, SMS, so you don't miss profitable trades, details of where to enter, exit, our weekly trading plan with a watch list of ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you an edge in the markets. Again, all you need to do to get access is go to www.jointhegoldandsilverclub.com, complete the application form, and we will, of course, get in touch with you ASAP. Okay, fantastic. So with that, guys, just for a quick recap for you, we have the US GDP numbers coming up. That is in half an hour. So get ready for that. Could provide some great trading opportunities. And of course, I very much look forward to hear from those of you who will be making an application and joining us at the Gold and Silver Club. So with that, I wish you all a fantastic day, fantastic weekend, good trading, all the best. And we will, of course, speak to you very soon. Okay, thanks, guys. Take care. All the best. Bye-bye.